Good morning, this is Carlisle from the library at the Francisco Marroquin University, the world's leading libertarian university, without doubt. I think we've established that. And following in the tradition of interviews with people who have received honorary doctorate degrees from the Marroquin, or the Marro as it's affectionately known here, I have with me John Allison, the chairman of the board.
I'm retired chairman
Chairman of the board of BB&T, a banker with ethics. He follows, of course, people like Dick Armey, John Stossel, Jose Maria Aznar, and other prominent libertarians who have been honored by the Francisco Marroquin. So first, let me congratulate you on now being Dr. Allison.
Thank you very much.
And the thing I'd like to get into this morning is, a lot of people would say, and they will say, when they hear that I'm interviewing a banker at this particular juncture, this interview follows, by 2 days, a short circuit on Wall Street, or something happened on Wall Street, in a general climate of banks are bad, big banks are worse, only the government can help us out of whatever it is that we're in, and we'll get to that in the United States here in a little bit. So I'd like to go back to kind of to the beginning in terms of my studies on you. You believe very strongly in a code of ethics and in applying ethical behavior in banking. Could you sort of develop how that came about?
Yeah, that's a great question. I guess I have long believed that having the right principles was the foundation to personal success and personal happiness. There are a lot of temptations in the short term, and that happens to business leaders like it happens to everybody else. But if you've developed your principles based on a very careful thought process, then adhering to those principles in the long term leads to success. And fortunately, BB&T had almost none of the problems that other financial institutions had in the U.S., I think, because of our principles. And interesting enough, the principles are very libertarian in your context. I'm a big student of Ayn Rand, who the objectivist philosopher, and a lot of her ideas we incorporated at BB&T. And it begins with a really clear sense of purpose. And the beginning aspect of our purpose is a fundamental commitment to help our clients achieve economic success and financial security. That's the business we're in. And one thing I've said to our employees for a long time, never ever do anything that's bad for your client, even if you can make a profit in the short term, because it'll always come back to haunt you. And if you do the right things for your clients, they'll be more successful, they'll also be more loyal, and you'll win. And life is really about creating win-win relationships. That helped us avoid a lot of mistakes in the financial crisis. We didn't do the negative amortization, the subprime loans, because we knew that they would be bad for a lot of our clients.
But if the Fed or somebody, I don't know where the instructions came from on those subprime loans. Some of my friends in Wall Street call them ninja loans, no income, job, or assets, right? But if the instructive, or if it is an instructive, comes down and the government gets involved in the free marketplace where you're no longer totally free to make your own lending decisions, how do you resist that pressure?
Well, you do what you minimally have to. and so we do what we minimally have to, and you try to make it as productive as you can. And then you can't eliminate the problems in totality. Of course, what drove the big problems in the United States in that sector, we're getting off a little bit on a different subject, was errors by Freddie Mac and Fannie Mae, the giant government-sponsored enterprises that really dominated the affordable housing subprime lending market. So yes, there were private institutions that made mistakes, but they were much smaller than the errors made by the government entities, Freddie Mac and Fannie Mae.
Why don't you come back and run something like Freddie Mac or Fannie Mae?
Well, I don't think...
back, you're not going that far.
The problem
you can drive from North Carolina to Washington.
Freddie Mac and Fannie Mae shouldn't exist. So if I were to run them, I would run them away. I would eliminate them.
You might find a lot of support for that.
Yeah, I hope so, because I think if we don't get rid of them, they'll do the same thing again. They'll do the same thing.
Now, one of the things that distresses me, and as everyone knows, I am a libertarian, and you are too, you just probably haven't figured it out yet, or what it really means. We don't want government in our lives, except, I guess, to protect our borders. I can't think actually what else they do, but yet your bank took TARP funds, unless I misread.
Sure.
How do you square that with not wanting to do or wanting to do as little as you can with the government?
Well, I'll tell you, it's an interesting story. I was adamantly opposed.
Can we just explain a little bit to those who might not be familiar? The TARP funds basically were, I'll just call them the government temporary relief funds.
Hey, I'll tell you a story on that. When Congress announced the effort to look at TARP, I was adamantly opposed to it. I wrote Congressman, I went and lobbied against it. I was the only CEO of a large financial institution in America that was vocally opposed to the TARP program. Interesting thing happened. When TARP passed, however, we did take TARP funds, and I had a very interesting experience. Our regulator, which is the FDIC in the United States, they called us and they said, you know, your banks had plenty of capital by our capital standards that go back for 30 years. However, we're getting ready to introduce some new capital standards. And we don't know what those new capital standards are going to be. But we're confident that you don't have enough capital under these new standards, which we don't know what they're going to be. And if you don't take the TARP money, we're going to have to come in and audit you. And we're pretty confident you won't have enough capital. And the reason that happened is Bernanke, who's head of the Federal Reserve in the United States, it was a student of the Depression in the United States. He's an academic, which is bad because he thought it was 1930. Whatever it was 1930. In the 1930s, when the United States had a depression, the federal government, Roosevelt, tried to bail out individual banks. And it didn't work because the market figured out that company was in trouble. There were 3 large financial institutions in the U.S. that were in serious trouble. Bernanke felt like if he tried to bail out those companies, that the market would jump on them. So he decided he wanted all the large financial institutions, the $100 billion plus companies, to participate, and then he would call it a program to encourage lending in the U.S. instead of a bailout. So he essentially forced all the large banks to participate. Now, TARP was a ripoff for healthy banks. We had to pay very high interest rates, and we didn't need the money. In fact, they came in and did stress tests later on and said, well, you guys don't need the money. So we had to pay. It was a penalty for healthy institutions and the benefit for unhealthy institutions.
You know, just last night I had a conversation with my son, who's also in investment banking, and he thought your answer would turn more towards a fiduciary responsibility to the shareholders. Well, if it's there and it's beneficial, although you're suggesting it might not be beneficial, that you have a fiduciary responsibility also to the shareholders.
Well, I think that's true too. I mean, you can't go against your regulator without killing your shareholders, right? So you really didn't have it. I think this is you talk about the libertarian issue. You can be opposed to laws, but you can't violate the law. I mean, you just can't, because that's the end of the game. Yeah.
But you know, the distressing thing to me is as I see more and more of life, is the shift in values in the United States. Not just a shift in value, the shift in expectations. If there's a problem, who do you go to? You go to the government, right? It seems to me in the old days, I hate to call them the good old days, you tried to sort these things out yourself, or let the market sort them out. You know, I can't believe, for instance, I still can't believe that the automobile companies, why not let them go? I haven't talked to a single person who said, well, look, if GM's got itself in such a mess, let it go. Chrysler gets in a mess every 10 years, let them go.
Well, here's the interesting thing about General Motors. Companies go bankrupt, they don't disappear. General Motors will still be making cars. What happened in General Motors, which is really an injustice, is by the way they handled it, the bondholders and the shareholders got killed. The pension plans of the unions got protected. So this was just a huge subsidy of the union pension plans. If they'd gone in traditional bankruptcy, the pension plans would have had to take a hit like everybody else. So all they did was shift the loss to the bondholders and the shareholders for the benefit of the union pension plan. So that was the government for political reasons, because the unions are so powerful in the Democratic Party.
And in this administration, the unions arguably put the president in the White House.
Exactly.
I keep thinking, as I look at the newscast for the last couple of days, of people in Greece who are allowed to retire at 55 rioting because their pensions are going to be cut and they're no longer going to be allowed to retire at 55. I keep thinking, what about the UAW and other unions here? What would happen if you said, hey, you know those pension benefits that you were sure you were going to have for the rest of your life? Cut those and see what happens. Now you mentioned the 100 billion plus club, and I'd like to just mention, and you, I'm sure, can give some of the base numbers to to the viewers more easily than I. BB&T grew from quite humble beginnings to over 100 billion in assets now. One of the either right on the cusp of, and we'll throw Toronto Dominion out. They're not really Americans, but the 10th largest bank in the United States as measured by assets. How?
We really focused, I think, on the human system. That competitive advantage was in the minds of our employees. We made a very interesting decision early on to invest more in employee education than our competitors did. We own and operate our own university, BB&T University. We did it within the context of the philosophy, which you would describe as a very libertarian philosophy. And it began with the concept we were going to make logical decisions based on the facts. We were very reality, rationally driven. We encouraged people to be independent thinkers. To do that, we were very decentralized, operated with a series of community banks, a lot of autonomy, but you have to invest in people to make that. Strong focus on productivity and designing systems that were highly efficient. A very strong commitment to honesty, integrity, and very non-compromising in that regard. A real strong focus on justice, that we reward superior performance and we deal aggressively with non-performance. And we're very open, very conscious about that. Strong commitment
Could you come back to that for a second? Because very seldom do people in the private sector actually emphasize the fact that you're not tolerant with poor performers.
Right.
You actually make an effort to get rid of the people who are dead wood, dead weight, whatever you want to call it?
Well, we believe that it is an injustice not to deal with poor performance. We consider it a moral issue. Two reasons. One, poor performers hurt the team. And secondly, it's unfair to the poor performer. I've never met a happy poor performer. Now, we will try to help people become better performers. Sometimes people aren't performers for reasons that are beyond their control. And so we'll look at our bottom performers and we'll give them re-education opportunities, et cetera, et cetera. But if they can't perform, then they can't stay at BB&T. And we're very open about that. And interestingly enough, we have I'm sure we have by far the lowest turnover of a major financial institution in America. Because when you have a demand for performance and you reward performance, you naturally select people that are more committed to the job. And so we've had a much more loyal employee base with a very conscious discussion of justice. We also strongly encourage our employees, we talk about self-esteem and self-motivation, we encourage our employees to act in their rational self-interest. We think that people should act in their rational self-interest. It's important to understand what that looks like, though, because a lot of people think that taking advantage of other people is selfish. It's not. It's self-defeating. Nobody's going to trust you. And a lot of people describe things. I had a relative of mine that abused alcohol and ended up dying of cirrhosis of the liver, and people say, well, he was real selfish. No, he was self-destructive. Being selfish, you have to teach people, is about having a sense of purpose in your life, meaning in your life, taking care of your body, taking care of your mind, doing things you enjoy doing, having good human relationships. And we wanted people that are selfish in that proper context. And I think that's, by the way, a whopping competitive advantage to tell people that they should act in their rational self-interest. And if this is the place that they pursue their self-interest, then stay here. If they don't, go somewhere else, you're going to be happy. Because we don't want you here if you're unhappy.
I'm sure you can guess that this was a central theme of the people who came here on the 50th anniversary here recently, Ayn Rand,
sure.
Talking about how if everyone acts selfishly, or what would be called selfishly by the outside, then it's good.
It is.
The net result is good.
And it's important, though, that people define selfish right, because a lot of times people talk about selfish, it's about taking advantage of other people, and that is not selfish, because people won't trust you. And go back to that discussion I had earlier about our clients. Doing the right things for our clients is in our long-term selfish interest, right? And that's what is important for people to understand.
Big is bad. That's the latest thing to come out of Washington. I hope I said that with the appropriate amount of scorn. Break up the big banks. The too big to fail concept didn't work. Well, it would have worked if the government stayed out.
Right.
Some of the big ones would have failed. But how do you feel about it? You're a big bank now.
Sure.
Very big bank.
Well, see, I don't believe big is good or bad. I think big is a neutral statement. The issue is, are you good? And the dilemma we have in the U.S. in terms of are these institutions too big to fail? I don't believe they're too big to fail. I'm exactly like you. In my career, Citigroup has failed 3 times. Every time they've been saved by the government and they've gotten bigger and worse. And they certainly could have let them fail this time. I think that would have, there's a bankruptcy process by which they could fail. The market could have corrected. The dilemma is if you're going to keep these big companies in business when they fail, then you distort the market because they get a huge competitive advantage. So I believe they should be allowed to fail, period. Now I would say this, if they're not going to let them fail, then they do need to break them up because you can't have an effective government subsidy for large financial institutions because then you got a distortion in the marketplace. But I'm for letting them fail. And I think we have a bankruptcy process that would work. One of the misconceptions was the so-called contagion risk in the derivatives market. Just is simply not factually true. The only people that were exposed in the derivatives market were the speculators. Remember that for every loss, there's a gain in derivatives. It couldn't have caused a financial crisis, not mathematically possible. Also, the people that were hedging, like BB&T in the derivatives market, we manage our risk. So Lehman Brothers failed. We lost nothing. Bear Stearns effectively failed. We lost nothing because we were managing our derivatives risk. Now, Goldman Sachs wasn't a maybe not, based on what, and if they weren't, then they get to fail, okay? I don't know whether they were or not, but
I don't think I'm going to go get into Goldman Sachs. Yeah. I have some pretty strong feelings there, but I've got some friends there too, so. Yeah.
Well, I'm not trying,
Yeah, and hedging is, you say hedging, most people who don't know anything about banks, Kellogg's hedges. It buys contracts on forward delivery of corn so that the price of cornflakes won't go up if there's a disruption in the corn market. Everybody.
Farmers hedge. Sure. I grew up as a farm lender, and if you're going to raise a crop, you want to know what the price is going to be so you can decide how many acres of soybeans to plant. Plus, by the way, a lot of the hedges, the derivatives in the business were caused by government policies. You have to hedge your interest rate risk. Yeah, we have something called mortgage servicing right that have to be hedges. Most of our hedges were either natural market phenomena or caused because the government wants you to do hedging, which is kind of an irony.
What happened in the so-called banking crisis, and what can be done or what should be done and what shouldn't be done to get things back to normal, however normal is defined or redefined?
Several basic themes. First, the financial crisis in the United States was caused by government policy. A lot of people perceive the United States to be a free market. We're not. We have a very mixed economy. The mixture varies a lot. Technology is probably 20% government, 80% free. Financial services is 80% government, 20% free. It's not surprising the most regulated industry in the U.S. failed. Government policy created a bubble in the housing market. That bubble deflated the way bubbles always do. That got transmitted into the capital markets, into the economy. Yes, individual financial institutions made bad mistakes, as we were discussing. I think they should have been allowed to fail, but they were secondary to the government policy. And then finally, almost everything that's been done in the U.S. since we started this, some of which will help in the short term, will be very destructive in the long term. Let me tell you how government policy did it, and there are two primary culprits. Number one was the Federal Reserve. The Federal Reserve was created back in 1913. And when that happened, the monetary system in the United States was nationalized. There was no private monetary system. And the Federal Reserve was created to prevent volatility in the economy. Well, here's the problem. In a free market, we're constantly making mistakes. We're not omniscient, and markets are constantly corrected. Businesses fail and new businesses will be created. That's a good process. If you cut out the downside, all you do is push the problems into the future. And that's exactly what Alan Greenspan did. From 1990 to 2007, we really had no meaningful economic correction because he was pumping out money anytime, anything.
And I'm going to say for the record, as everybody who listened to me on the radio for all those years knows, that Alan Greenspan's tenure was disastrous.
It was disastrous.
All he did was push the interest rate lever up and down. That was it. He did nothing else.
He printed a bunch of money, and then Bernanke inverted interest rates, which kills banks because banks borrow short and lend long, and inverted interest rates, short-term rates are higher than long-term rates. What that did is drive everybody out on the risk spectrum because banks had negative real margins. And he kept the longest inversion in U.S. history, and markets never invert. Only the Fed can invert interest rates. So we had this huge bubble by Greenspan printing a bunch of money, Bernanke forcing everybody on the risk curve, and it imploded the way bubbles do. It ended up in the housing market because of Freddie Mac and Fannie Mae. These were two giant government-sponsored enterprises. They never would have existed in a free market. The big event happened in September of 1999, I remember it, where Bill Clinton set Freddie Mac and Fannie Mae to have a goal of have half their assets in affordable housing, now subprime loans. A bunch of economists, including liberal economists, by the way, said this is extremely risky. because there's just not that big of affordable housing subprime market. And if Freddie Mac and Fannie Mae reach this goal, they could go broke, and it could take out the U.S. economy, and it could happen in 10 years.
People said that at the time?
Yes, a number of, and 9 years later it happened. I was personally on a committee of the Financial Services Roundtable, the largest banks in the U.S., trying to get Congress to do something about Freddie Mac and Fannie Mae for 9 years. We ran the numbers, and a 15-year-old would have said, these guys are going broke, these guys are going broke. We meet with Congress, and they absolutely refused to do anything about it. For two reasons. One was, I would call it a religious belief in subprime affordable housing. And second, Freddie and Fannie were huge contributors to both political parties. Biggest contributor to the Democratic Party. When Freddie and Fannie went broke, they owed $5 trillion. Now remember, a trillion is a million. They were leveraged 1,000 to 1. They never would have existed in the free market. They existed because they had a government guarantee. So the Fed printed a bunch of money, and it ended up in housing because of Freddie Mac and Fannie Mae, and a bunch of banks made mistakes, but the mistakes were trivial compared to this huge government drive.
And I want to remind the viewers that this is by way of illustrating Dr. Allison's suggestion that government policy caused the problem.
Exactly. You know, it's interesting, though, going back to this issue of philosophy, which you were asking me originally about, the real cause of the problem, and this is what I think we struggle with in lots of places, was philosophical, not economic. It was a combination of altruism and pragmatism. Where did affordable housing come from? Everybody has a right to a house provided by who? Where does free health care come from in the U.S.? Everybody has a right to health care provided by who? You know, my right to health care is my right to enslave a doctor to provide it, or enslave you to pay for my medical care. That is a total inversion of the American concept of rights. In the American concept of rights, you have the right to what you produce, what you create. You don't have the right to what somebody else produces. Altruism leads to a redistribution from the productive to the non-productive, and it basically says nobody has a right to their own life. And then you combine that with pragmatism, which is what you end up doing in business, what they teach at business schools. And the reason for that is you can't be an altruist and be in business, right? You'll go broke. So you become a pragmatist. And if you're a pragmatist, you do what works. Well, here's the dilemma. Lots of things work in the short term that are very destructive in the long term. Affordable housing loans, subprime loans work for a long time. These negative amortization mortgages work for a long time. And what that leads to, if you're a pragmatist, you actually can't be rational, because rationality requires long-term perspective. And if you're a pragmatist, you can't have integrity, because integrity requires long. So you see the lack of integrity in business. In a certain sense, if you accept pragmatism, you're rejecting integrity. And you combine altruism and pragmatism, and you get the free lunch mentality, which is what's plagued the U.S. Look at Social Security and Medicare, huge deficits, and yet neither of the candidates for president in the U.S. talked about either one of these seriously, and if they had, they couldn't have gotten elected.
And they won't be talking about it this November either.
They won't be talking about it either. And that leads to the death of personal responsibility, which is unfortunately, ultimately, in the long term, the death of democracies. And so, and here's the interesting thing, the cure is also philosophical, and this would...
Okay, that's how we got there, so what's the cure?
The cures go back to the basic principles that made America great in the first place. Life, liberty, and the pursuit of happiness. Each individual's moral right to the product of their own labor, including if they produce a lot, and the right to give it away if they choose to, but the right, and that leads to personal responsibility, because there is no free lunch. And it actually demands that people think rationally, take self-discipline, and act in a long-term manner. It requires self-responsibility. You know, the United States was the first country, maybe the only country, ever created under the idea that people should act in their rational, long-term self-interest, properly understood. Isn't the pursuit of happiness, isn't that what that really is? In the context of what we call the trader principle, and that is that you shouldn't take advantage of other people, but you shouldn't self-sacrifice, that what we are is traders. We trade value for value. In our business, we help our clients achieve economic success and financial security. Let's make a profit doing it. We get better together. And life is about creating win-win relationships. That's one reason I'm such a big fan of Ayn Rand and her book Atlas Shrugged, because I think her philosophy, which is really reinforcing the Founding Fathers' ideas and with the understanding we have in modern times, is really the cure for the problems, because this is really a philosophical problem more than it is an economic. Look, the economics reflects the philosophical beliefs.
I don't want to be overly cynical, but obviously I agree with you. I mean, we talked before the interview, and you know I'm on the same moral page with you and pragmatic page with you, but then we get something like healthcare. You know, people are voting themselves, or at least their representatives are, I don't know how the people feel about it, voting themselves a free lunch.
Well, it's interesting. The healthcare thing in the United States was very unpopular. The Democrats passed it over a large percentage of people that were opposed to it, mostly because of the government interference in the healthcare system. And of course, the irony is that everybody in the United States does get healthcare. This was not about healthcare. This was about insurance, which is an interesting phenomenon. So I'm not saying that people don't want a free lunch. I think that is a real challenge, and it goes back to the failure of our educational system. I think our educational system in the U.S., which comes from the ideas in our universities, is the problem. The educational system educates the teachers that teach the students that everybody is entitled to a free lunch, and nobody has, a fundamental responsibility for providing it. And I think that's where we get the consequence. But even that said, there still is an American sense of life that gives me some optimism that says we don't trust big government too much. And Americans are fundamentally individualistic. So I don't think we've gone over the dam, although I'm worried. I'm worried.
And we'll see. There's a self-adjusting mechanism there also, which is elections for Congress every 2 years. And we'll see what happens. And not that I'm going to predict what's going to happen in the U.S. elections, but these things do adjust.
They do, fortunately.
Yeah, fortunately.
Hope so.
The rest of the government program, Social Security.
We've been running a Ponzi.
Money's not there.
We've been running a Ponzi.
From Congress or something.
It's a huge Ponzi scheme, and it has a huge deficit. Medicare has a bigger deficit. We've got to ultimately privatize them. You can't not do something for the people that are already in the system. I mean, you had a moral obligation, but you have to raise the ages of retirement age. In Medicare, what we really need to be doing is moving back to a privatization of the healthcare system. One thing that from economics, whenever you make something free, it gets wasted, right? You destroy the pricing mechanism. That's why healthcare is consuming such a great portion of the product of the United States and not having a good outcome. You see this in people 85 years old that are getting ready to die, that half the amount of money spent on healthcare spent the last month in the hospital. The doctor's scared because he'll get sued under the dysfunctional TARP system we have in the U.S. And since it's free, daughter feels guilty because she didn't take care of mom, right? and they torture them to death. But you've got to move back to a private system where you get the discipline of the market, where nobody even knows what it costs to do anything anymore because it's all the government's owns the health care.
That's another topic that we haven't seen the politicians, particularly those from one party, discussing, which is tort reform.
Yes. It's a huge issue, and it's a bigger issue because of the threat of lawsuits. If you talk to a lot of doctors, it's not that they've been sued, they're afraid to be sued, and then they can lose so much money and be ruined for their lives if they get sued. And you see these jury trials, and half the time you talk to the jurors, and they don't think the doctor's guilty, but they feel sorry because this baby's been deformed or something. Which you can understand.
It's a big company.
Yeah, big company. Yeah, the insurance company can afford to pay for it. Kind of mentality.
Well, you sound to me like you're a little bit concerned about the direction that the U.S. is drifting towards.
I really am. Here's what I think. I think from an economic perspective, we're probably going to have some kind of recovery unless Europe just really is rough because we've spent so much money. Mm-hmm. I think the most likely scenario is we're going to have 4 or 5 years, maybe even longer, of stagflation. Looks like the 70s. In fact, these policies look a lot like the 70s, where you have very high interest rates, higher unemployment than you ought to have, lower real growth rates, some real growth rates. But I think in 25 to 30 years, unless the United States changes directions, we go broke. I mean, if you look at the actuarial liability under Social Security, under Medicare, we're running $1 trillion operating deficits. We got a dysfunctional foreign policy. We got a big problem with the retirement of the baby boomers, and we got a failed K-12 education system. And by the way, lots of Western European countries are facing the same thing. This Greek thing's not about Greece. It's about people looking at the formula and saying, wow, when is everybody going to have to pay for what we've been doing?
And President Sarkozy in France is tackling some of these things right off the bat in his administration. Good for him. It sounds to me as though we ought to have an honorary doctorate awarded to Dr. Little, Dr. Chicken Little. What do you think? No, I agree with you. I'm distressed at the way the country's going, and I'd like to think there are enough clear thinkers that understand that going back to principles is the way out of it. And that's not going to be quick either. When somebody comes to BB&T to apply for a job, let's just say I'm a university graduate, and I've done well, I hope that you only take the ones that can show a little bit of discipline in their studies, right? What do you do to give me the sense of values or allow me to understand the values of the organization and express my own self?
What we do, first, we're very selective. We have a very strong leadership development program we've had for a long time. We hire only the best and the brightest, but we also select for what I'd call character traits. We can test, use psychological testing. They're not 100% accurate, but they're pretty accurate about, are you fundamentally honest? Do you fundamentally have integrity? Do you fundamentally already agree with our basic beliefs? Not totally aligned, but in general aligned. And then we educate you on our belief system as our culture, which is equally important to the technical training. So we'll be training you technologically, we'll be training what we call spiritually, helping you become more self-aware, of understanding what motivates you. And also, we're going to train you on our philosophy. And it's a natural selection process. If you don't like our philosophy, then you will choose to leave, and that's fine with us. But very few people actually make that choice, because the power in the BB&T value system is twofold. First, it's integrated, and second, it works. It's not an easy value system. I talked about justice, but it also has teamwork and those kind of things in it. But it's a value system that people can live. It improves their probability of being successful, improves their probability of being happy. One way we grew, we did lots of mergers and acquisitions, and we integrated thousands of employees into the BB&T culture around this same set of values. And the best people stayed with us. It was interesting. You get great selection. Let's talk justice. A lot of times companies aren't doing too well because they aren't very just. They're paternalistic. And we come in, we say, we're going to be just, and the better people are going to get paid well, and the non-performers can't stay here.
And you give them autonomy.
And we give them autonomy to do that and evaluate that.
You mentioned something a few minutes ago, which I think is always worth repeating. It bedevils me because I can't remember who said it. I'm going to guess Sam Walton, and that's that you can train anybody to do anything, but you can never take a dishonest person and turn him into an honest person.
Absolutely.
And the first thing that you mentioned when you talked about core values was honesty.
Absolutely. Well, if somebody's a weak performer, we'll try to help them. If we can't help them, we can't help them, but we'll try to help them. But if you violate our ethics, we'll fire you. I don't care if you're the highest performer in the bank. Without reservation or hesitation, boom, you're gone. And our employees understand that. It is a non-compromisable ethics system. Because people that are dishonest, even if they dishonest a little bit, they'll come back to haunt you in the long term. Before this financial crisis, we fired our highest producing mortgage lender over an ethical issue. Turned out he went over somewhere else and made a lot of unethical loans that got him and the company that he went to in trouble. But on the surface, nobody knew that. But we knew he had had a single ethical violation, and that's just the way we run our company. If you violate the ethics, you're gone.
Well, I hope that there's a lesson in this, not just for the people around the world who are watching this interview, who will be much more familiar with many of these topics than people are in Guatemala, but the issue of honesty and ethics and a code of ethics to which you adhere. And if you don't like it, you can leave, and if you violate it, you'll be thrown out, is a lesson I think that really should be applied here in government, especially in government, and in the private sector in Guatemala. What would you like to talk about in your remaining 3 minutes?
Well, I just want to congratulate the university here. This is a unique experiment in the sense that the mission of this university is to educate and communicate the principles that underlie a free society. Individual rights, personal responsibility, free markets. Those principles are extraordinarily important to overall well-being and to the happiness of individuals. And unfortunately, our society, not just the United States, we're moving in the wrong direction. We're moving towards socialism, we're moving towards communism. Socialism has failed everywhere it's been tried, and yet we're doing it again. And I think that the students that come out of this university have the opportunity not only to understand the principles, but to live the principles. And something I was telling them, I hope they will pursue their own personal happiness in the deep sense of happiness, not a good time on Friday night, but a life well lived, the hard-earned happiness. And I think by doing that, there'll be examples to other people that when people pursue their own happiness, they raise their self-esteem, they are very productive out of that process, and they benefit society as a whole. So the rational pursuit of people's happiness, each individual's happiness, is good for them, obviously, but it's good for society. And I've encouraged these students to be examples in that regard, because the most successful societies, the most benevolent societies are when people have the right to their own life. And then they're naturally nicer to other people. And if you look in the end in truly socialistic societies, everybody ends up hating each other because they're all slaves to each other. And that's what, it's not just destructive in terms of an economic sense, it's destructive in terms of a personal happiness sense. And that's the end of the game. Happiness is the end of the game. And free societies allow people to be happier. and that's one of their intangible but incredibly important benefits.
And I'm sure you've seen many corporations and banks, as I have, where the dog-eat-dog attitude was so great that you didn't even want to go to work. I mean, who's got the bigger office? And then at that point you take measures which are really unethical to get ahead, and I think that's really damaging. Another thing that I want to go back to.
A lot of organizations fail doing it.
Yeah. You seem to have a slight Southern accent.
I do.
Is this a regional thing? Do you think? I'm not. I can't be accused of bias. I'm not from New England. I'm from California. If I'm from anywhere in the U.S., but it seems to me the people in the South and in Texas and places like that understand this better than the rest of the United States.
Well, I think there are two regional characteristics. One, I think that in the South, people do believe in ethics. I mean, they think ethics matter, and it's kind of a general conversation, ethics matter. And secondly, I think people in the South, at least on the surface, and Texas is a classic example, appear to be more committed to being individualistic. They like government less, and I think I think that's actually an advantage. One reason that people have moved to the South, and it's had better growth rates. Mm-hmm. So,
as we close this, then I'd like to encourage viewers to go to the web, go to the BB&T page, and all of the links to various things. And if your corporation or your organizations as well as corporations does not have a clearly stated sense of values, and if those values aren't rooted in life, liberty, and the pursuit of happiness, think about it and take away from this interview a commitment for your own employees, your own organization, for yourself, to do the same sorts of things that Dr. Allison has done. And I want to congratulate you again. This is quite a prestigious university, and it's quite an honor for you to be receiving a doctorate degree from them.
I'm very honored, and I do appreciate it very much.
Thank you very much, and enjoy the rest of your stay in Guatemala.
Thank you.